Assalamualaikum and good day everyone. Today we will be presenting the budgeted financial performance for the Ice Cream Depot for the first 2 quarters of 2025. Our company, the Ice Cream Depot, creates delicious artisanal ice cream using locally sourced ingredients. We offer a wide variety of flavors, including our popular ice cream, Vanilla or Lala. Besides our retail operations, we also supply restaurants, cafes, and specialty stores. Our company has a paid-up capital of RM 1.5 million from our founders and shareholders. This funds our productions, retail outlets, marketing, and initial expenses. The Ice Cream Depot is headquartered in the renovated warehouse in Bukit Bintang, Kuala Lumpur. We also have retail stores in busy shopping districts and popular tourist spots. Our leadership team includes Anis Maisara as CEO, me myself Diana Balkis as CFO, Alina Natasha as COO, and Umi Fairuz Najwa as CMO. Each director brings valuable experience and expertise to guide the company towards success.
For Task 2, which is product and features, our business offers two main products, which is ice cream and cones. Let's start with the ice cream. Our ice cream is priced at 50 ringgit per unit. It stands out for its creaminess, sweet, and inviting scent of vanilla. We estimate sales of 12,000 units for the first quarter of 2025 and 9,000 units for the second quarter. For production, we use fresh milk and vanilla bean as our direct materials. Fresh milk costs RM 1 ringgit per liter and we make 0.5 liters per unit. Vanilla bean costs 50 cents per gram and we use 20 grams per unit. Next, we have our cones priced at 5 ringgit per unit. They are known for their crispy and crunchy texture made from wheat flour and sugar. We estimate sales of 24,000 units in the first quarter and 16,000 units in the second quarter. Wheat flour costs 70 cents per gram and we use 30 grams per unit. Sugar costs 30 cents per gram and we use 2.6 grams per unit. For our production process, we employ both skilled and semi-skilled labor. Skilled labor is paid 10 ringgit per hour and we need 0.15 hours per unit for ice cream and 0.08 hours per unit for cones. Semi-skilled labor is paid 7 ringgit per hour, requiring 0.1 hours per unit for ice cream and 0.06 hours per unit for cones. The total direct labor cost for skilled workers in the first quarter is 70,775 ringgit and 30,500 ringgit in the second quarter. For semi-skilled worker, the cost is RM 8,295 ringgit in the first quarter and RM 6,300 ringgit in the second quarter. Apart from that, let's move to the factory overhead and selling and administration costs. First, for quarter 1 2025, factory overhead costs include rent of 1,080 ringgit, utilities totaling 30,000 ringgit, and salaries of maintenance personnel at 90 ringgit. For selling and administration costs, it consists of 600 ringgit for advertising, 30,000 and 1,900 ringgit for delivery van, and 1,800 for commission. After that, for quarter 2 of 2025, the factory overhead costs encompass maintenance and repair for machinery at RM 15,000 ringgit, insurance expenses amounting to 5,400 ringgit, and depreciation of plant and machinery totaling 1,800 ringgit. For selling and administration costs include 7,500 ringgit for office salaries, RM 4,500 ringgit for warehouse rents, and 2,400 ringgit for tenant expenses.
Now we move to the sales budget for quarter 1. The expected sales for ice cream were 20,000 units at RM 50 ringgit per unit, totaling RM 118,000. For cones, the expected sales were 24,000 units at RM 5 ringgit per unit, totaling RM 120,000 units. This make the total sales RM 300,000 ringgit for quarter 1. In quarter 2, the expected sale for ice cream were 9,000 units at RM 50 ringgit per unit, totaling RM 135,000. For cones, the expected sales were 16,000 units at RM 5 ringgit per unit, totaling RM 18,000 ringgit. This result in total sales of RM 215,000 for quarter 2 ringgit 99 cent. Next, production budget. For quarter 1, the expected sales for ice cream were 20,000 units, adding 15 units brings the total required to 2,015 units. Deducting the opening stock of 200 units, the production requirement is 1,100, 1,815 units. For quarter 2, the expected sales for ice cream are 9,000 units, adding 15 units bring the total required to 9,015 units. Deducting the opening stock of 15 units, the production requirement is 9,000 units. In quarter 1, the expected sales for corn were 24,000 units, adding 500 units, bring the total to 24,015 units. Deducting the opening stock of 900 units, the production requirement is 23,600 units. In quarter 2, the expected sales for coins are 16,000 units, adding 115 units, bring the total required to 16,115 units. Deducting the opening stock of 500 units, the production required is 15,615 units.
In this slide, we will discuss the direct material purchase budget for the first 2 quarters, focusing on the required materials, planned stock, and total cost. So for quarter 1, we need 5,925 liters of fresh milk, including a closing stock of 200 liters. The total required is 6,135 liters. After subtracting the opening stock of 500 liters, we need to purchase 5,625 liters at RM 1 ringgit per liter, costing to RM 5,625 ringgit. For vanilla beans, we required 237 kg, adding 4.5 kg from closing stock. The total is 241.5 kg. After deducting 5 kg from opening stock, we need to buy 236.5 kg at RM 0.5 ringgit per kilogram, costing to RM 118 ringgit 0.25. We need 708 kg of wet flour with 20 kg as closing stock. The total required is 728 kg. Subtracting 5 kg from the opening stock, we purchase 723 kg at RM 0.7 ringgit per kilogram, amounting to RM 506 ringgit. For sugar, we need 61.36 kg, adding 20 kg for closing stock. The total required is 81.36 kg. After deducting 4 kg from the opening stock, we purchase 77.36 kg at RM 0.3 ringgit per kilogram, totaling to RM 23 ringgit and 21 cents. For quarter 2, we need 4,500 liters of fresh milk, including a closing stock of 100 liters. The total required is 4,600 liters. After subtracting the opening stock of 200 liters, we need to purchase 4,400 liters at RM 1 ringgit per liter, costing to RM 4,400 ringgit. For vanilla beans, we required 180 kg, adding 3 kg for closing stock. The total is 183 kg. After deducting 4.5 kg from the opening stock, we need to buy 178.5 kg at RM 0.5 ringgit per kilogram, costing to RM 89 ringgit and 25 cents. We need 469.5 kg of wet flour, including 10 kg for closing stock. The total required is 479 ringgit, 79.5 kg. Subtracting 2 kg from the opening stock, we purchase 477.5 kg at RM 0.7 ringgit per kilogram, amounting to RM 334.25 ringgit. For sugar, we need 41.6 kg, adding 5 kg for closing stock. The total required is 46.6 kg. After deducting 2 kg from the opening stock, we purchased 44.6 kg at RM 0.3 ringgit per kilogram, totaling to RM 13 ringgit and 38 cents.
Now we move to the direct labor cost budget. For skilled labor in quarter 1, the production required was 11,850 units for ice cream and 23,600 units for cones. The labor hours per unit were 0.15 for ice cream and 0.08 for cones. At a wage rate of RM 10 ringgit per hour for ice cream and 13 ringgit per hour for cones. The total direct labor cost was RM 17,775 for ice cream and RM 24,544 for cones. In quarter 2, with low production requirements, the direct labor cost was RM 13,500 for ice cream and RM 16,276 for cones. So next, semi-skilled labor. For semi-skilled labor in quarter 1, the production required was 11,850 units for ice cream and 23,600 units for cones. The labor hours per unit were 0.1 for ice cream and 0.06 for cones. At a wage rate of RM 7 per hours for ice cream and RM 8 per hours for cones. The total direct labor cost was RM 8,295 for ice cream and RM 11,328 for cones. In quarter 2, the direct labor cost was RM 6,300 for ice cream and RM 7,512. Now we move to the factory overhead budget. The factory overhead budget for 2025 includes rent, utilities, salaries of maintenance personnel, maintenance and repairs, insurance, and depreciation of plant and machinery. The total factory overhead expenses estimated for the year end are RM 72,000. Now we move to the selling and administration overhead budget. The selling and administration overhead budget includes advertising, delivery van expenses, commissions, office salaries, warehouse rent, and training expenses. The total estimated expenses for the year are $20,700.
Now we move to the last one, which is the statement of comprehensive income for quarter 1 and quarter 2 2025. So in quarter 1, the ice cream depot achieves sales of RM 118,000 for ice cream and RM 120,000 for cones. The total sales amounted to RM 300,000 ringgit. The cost of goods sold included the opening inventory, production costs, and closing inventory, resulting in a gross margin of RM 155,936 ringgit 75 cent for ice cream and RM 81,598 ringgit 79 cent for cones. After deducting variable non-production costs such as delivery van expenses, commission, maintenance, and warehouse rent, the contribution margin was RM 150,236 ringgit 75 cent for ice cream and RM 75,898 ringgit 79 cent for coins. Fixed non-production costs including rent, utilities, advertising, salaries, and other expenses were then subtracted, resulting in a net profit of RM 84,436 ringgit 75 cent for ice cream and RM 25,498 ringgit 79 cent for coins. In quarter 2, the ice cream depot sales were RM 135,000 ringgit for ice cream and RM 18,000 for coins, totally RM 250,000 ringgit. The cost of goods sold and variable non-production costs lead to a gross margin of RM 110,710 ringgit 75 cent for ice cream and RM 54,132 ringgit 64 cent for coins. After accounting for fixed non-production costs, the net profit for this quarter was RM 73 3,710 ringgit 75 cent for ice cream and RM 17,532 ringgit 64 cent for coins. So that's all from us. Thank you.